All right, speaking of these amazing cleanup efforts from the hurricanes, we're going to start to see the weather affect the economic data. Let's bring in Anthony Chan. He's the chief economist at Chase. Good to see you, Anthony.
Good to see you.
I know eventually, and we actually saw Harvey creep into jobless claims in recent weeks. That should continue, but we get the producer price index report this morning. We might see inflated energy prices as a result of the hurricanes.
There's no question. We're going to see energy prices picking up. The consumer price index, the producer price index is the first sign of that, showing that energy prices are rising because of shortages. Right. Remember that we saw gasoline prices surging because a lot of the oil could not be refined, and therefore that created sort of shortages. But over longer term, with all the demand destruction that took place, you saw that in Houston, more than 500,000 cars were destroyed. So over the near term, you're going to see a little bit lower demand for gasoline as people start to think about getting and replacing those cars.
Yeah, and right now oil price is climbing 1%. What do you expect the effects of the economy to be on the job market and also GDP in the near term?
I think over the near term, we're not going to get such a strong boost as we got after Hurricane Sandy, because during Hurricane Sandy, the unemployment rate before that hurricane was 7.8%. For Hurricane Katrina, the unemployment rate was 5%. So guess what we saw? We saw that after Hurricane Katrina, the month before that, we had a gain in non-farm payrolls of 196,000. You looked at the next 2 months, and you saw a deceleration of employment out there of close to 241,000, slower than the 196. And when you look at it over cumulative 2 months. But for Hurricane Sandy, what you saw over the next 2 months was an acceleration of growth in non-farm payrolls of about 84,000. So bottom line, yes, we're going to see a lot of rebuilding. Obviously, the Home Depots of the world will do well. Yesterday, Home Depot's stock price went up about 1%. The analysts are thinking that those earnings are going to pick up over the next 12 months, not just because of the hurricane, but you are going to see some rebuilding and a lot of spending. And GDP, by the way, on the same situation, when you have very low levels of unemployment, you don't see that surge right away as you saw in after Hurricane Sandy, where GDP really jumped up. You'll see it picking up, but it takes a little longer. The rebuilding takes place. GDP goes up in employment, but it just takes a little bit longer when you have tight labor markets. We got an unemployment rate of 4.4% today.
Yeah, investors really don't seem concerned because if you take a look at the Dow, the NASDAQ, and the S&P, Anthony, all three in record territory. Since the election, and this number really, really surprised me, the S&P has added $2 trillion in market value. In just a couple of months, $2 trillion. Are stocks overpriced?
I think that when you look at the stock market and you look at, say, forward price earnings ratios, they're approaching levels that people get a little bit nervous. But guess what? I've done some research looking at price earnings ratios when inflation is below 3%. It's about 19. So we're below 18 today. So I don't think they're too overpriced.
All righty. Anthony, good to see you. Thank you.
My pleasure.